And we're live. Content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical and no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial, do not represent the views of LPL Financial. Securities offered through LPL Financial, member of FINRA, SIPC. Investment advice offered through Gimbal Financial, registered investment advisor, and separate entity from LPL Financial. Good morning, everyone.
Amanda, that could be the fastest reading yet.
Better each week, I think. Not on that one. That one was the same.
Well, thank you.
You're welcome. How is everyone this morning? It's a lovely Friday morning.
Beautiful
Cool,
day out there.
clean, crisp morning. It's gorgeous. I'm here on the Monon Trail.
Nice.
Beautiful.
But there's been plenty today, and I think the dog of the day is the Australian Shepherd. If you have an Australian Shepherd, they must like to run, because I've seen several out on runs this morning. That was one good-looking dog, by the way.
They got a lot of energy to burn too, so.
Yeah, I don't think Caroline would be too impressed if I showed up with another dog at home, but whenever I see one of those
I don't think she
Australian
would
Shepherds,
either. I would not try that if I were you, Doug.
shock and all, look what we got.
If you like one, why not two, right?
Keith, didn't you experience that? Did one of your kids bring home a dog? Look what we've got.
Doug, why are you picking scabs?
Because she's one of my favorite tiners.
We saw the Shreves out last night.
Yeah, that was cool. You guys drove around the roundabout 3 or 4 times honking at us. We were riding mountain bikes last night off of 96th Street trails and saw Keith, and I don't know who was in your car, but it's nice to see you.
Yeah, it was fun. Connie's like, "What are you doing?" I'm like, "I'm letting the boys know we're glad we saw them." We just kept doing laps, like the Indy 500.
Yeah, that was hilarious. You got to watch out when you're a pedestrian on the roundabout. This is a shameless plug for Charlie Ward, accident attorney. You got to watch out when you're on the roundabouts, because some people will stop, some people will go. There's no real protocol to it. And so I kind of just wish people would go, and then eventually you could cross. But anyway, it's nice to see you last night.
It's always good to see all those boys out tearing it up. That's good.
Hey, I'm curious. I printed off some graphs and charts that I keep in a notebook folder, and I was looking at them this morning, and the date on these graphs were September 1st. And Keith, what in the world did you do to the stock market? What? What? Come on, man.
The market, depending on which index you are looking at, the U.S.-based indices, whether it's the Russell 2000, the NASDAQ, or the S&P 500, they peaked the September the 2nd. So we are, yeah.
That's the one I was looking at. What is that? That is the NASDAQ.
Yeah.
There it is.
Somebody pointed out to me that saw one of last week's show. I was having lunch with them yesterday, and they pointed out to me that I warned them last week, which would have been the 18th, that beware of your September statements. And since the 2nd, we've dropped 13% off the NASDAQ and a little over 10% off both the S&P 500 and the Russell 2000. So this is what we call a correction. It is not a fun thing for investors. Our goal is to try to smooth your ride out as much as possible and get you as reasonable rates of return as possible without unreasonable risk.
Yeah, and so one way we do that is with a very exciting asset class that's yielding about 0.00000%, and that's with cash. And so you may see an increase in your portfolios of cash here in the next few days, and that's by design. The whole design is to help protect you during times like this. And we can always get back into the markets too. So as you look through your statements, or if you see confirmation mailings coming through, just give us a call with questions. I know I've spoke with several of you this week, and this has been the topic of every phone call is what do you think about the next couple months? What's this going to look like? Primarily been election driven. Are you having those conversations too, Keith?
I am, and when we say cash, your statement will probably show the money market account is where it'll show up there. There may be a little bit of cash on there, but normally it'll say money market, and those are synonyms for us. But yeah, the concerns I think are for probably our traditionally more conservative fund, our dividend paying stocks. They just had a tough ride this year. We've had very good years, in my opinion, in the past, but dividend stocks have been out of favor for most of 2020, and consequently, those folks that are in those dividend paying stocks are probably showing some frustration because they aren't, I think 40% of the return on the NASDAQ this year and a good percentage of the S&P 500 were driven by those FANG stocks, the Facebook, Amazon, Apple, Netflix, Google. NVIDIA is considered in some of those as well.
Yeah,
and we haven't had those in our. Those aren't generally traditional dividend stocks, so they haven't found their way in those portfolios.
Yeah, Keith and I spoke earlier this week about several different types of asset classes, and one of the ones that I like to look at and pay attention to are utility stocks. And utility stocks just haven't done anything for a while now. They did not recover like the technology stocks did. And normally what happens is utilities can be one of the safer areas of equity stocks to go to. And so they just have not recovered well. Interest rates have still been down. Utility yields are not what they used to be 10 years ago, and their prices haven't recovered either. I don't see many exciting asset classes when I look amongst the different sectors in the stock market. Are you seeing anything interesting at all?
Let me just share my screen real quickly, and those who join our Curious Investors on Saturdays know how inept I am at sharing my screen. I went on like a 5-minute rampage about this screen, and then I realized I never shared it. I'm just looking. I'm just
Nice.
enjoying myself. So if I share the screen, it's a small miracle if it happens. So let's see here.
Here, you've got us to tell you whether we see it or not.
Yeah, do you see the screen over here, or am I sharing my NASDAQ screen or my Yahoo Finance? Is that?
No, we got the SDVY.
Yeah, that's Market Smith.
Okay. Yeah, so I'm going to draw some lines. You tell me if you can see these lines. This is a rising dividend fund, and this is kind of the trend of the price right here, about $21, $22 a share going into, this right here is January, this is 2020. And so going into it, even the first, the last part of the year and into the first part of the year, this thing was trading pretty nicely, and then all of a sudden it tanked off, and with the sell-off with COVID and such, and this one hasn't even recovered to the levels it was in the past. And I think when you're looking at any kind of utility or dividend things, you're going to see that L shape that's gone on with those, and so dividend paying things have had a difficult time. Even if let me show you one more here. This is a local stock, and no, I think our disclaimer said, Amanda, that we're not recommending anything. So in case you
Strictly our opinions.
Yeah, strictly our opinion. So are
Only
you seeing
for reference.
Yeah, are you seeing a stock chart here, Simon Property Group? Did I get that right?
Yeah.
Yeah. So this is Simon Property Group, and this thing was trading at $186 a share back in what was that? April of 2019. And you can buy all you want today for $63 a share. And it again has made this L shape that we said a lot of these dividend paying stocks have done. And if you contrast that with, do you see a new screen now?
Yep.
Right.
Yeah.
Right,
So if you contrast that with the V of the NASDAQ, you can see why some people might be a bit frustrated if they were buying dividend paying stocks. It's just not been the place to be for these last 6 months, 9 months. And we're really aware of that. I'd say if there's investors that have dividend paying stocks and they aren't comfortable with that strategy, or they feel like they've been left behind, it's more of a time for a discussion about, is this the right strategy, rather than anything more significant than that. I think every strategy has its time, but definitely dividend ones that have struggled, and they may not, it may not be the time to jump in dividend ones. I don't know. Like Simon Property Group doesn't seem like a place I would be throwing my life savings right now.
Well, if you want to go ahead and pull back the NASDAQ chart, Keith, or
Okay.
a chart of the S&P 500, and we spend a lot of time talking about the different moving averages that an index might have, and we spend some time talking about the 50-day moving average and the 200-day moving average. If Keith, if you'd point those out, the 200-day moving average is that black line that Keith is drawing the red arrow near. And then up above that is a 50-day moving average. And we look over about 50 utility stocks. And we get our data from a research firm that we've become friends with out in New York City. And as I looked through all 50 of those stocks, I only found 2 that were trading above its 50-day moving average. And so like Keith was saying, it may not be the time to be in those stocks because we're not seeing the prices ahead of the major moving averages. And it just goes back to supply and demand. There's a lot of supply out there, but not much demand for these types of stocks. And so when this happens, and this happens in every strategy out there, but when this happens, that's why we like to use cash. And we can park money in cash and then be available when the demand does start to pick up again.
Did my screen share give you a new stock now? Do you see a new company?
Yeah, we're looking at NiSource, and this is one of my favorites. I mean, I really like gas and electrical stocks. My favorite utility stocks are water stocks. One of my friends and I, we just laugh because with a water stock, all you have to do is set a cup outside and then let it rain. These are just pretty boring stocks normally, but this last 6 months has been anything but boring. It's just been hard. It's been really hard for people who own these.
Yeah, this was, for the curious investors, this was one of my first 3 stocks I personally bought back in the 1970s. And so I check it from time to time. I don't own it, and I haven't for quite a while. But again, if you're looking at this black line right here, it's the 200-day moving average. This thing crossed below it right here in October, came back above it for a little bit here in January, and then when the market took off, it tanked. And so it gave a number of indicators right along this $27, $28 range that the sellers weren't as excited about this stock as maybe they had been in the past. And if this were going to be a stock that we would buy, we would sure like to see it go from this trend line right here to one that is more angled in this direction. So,
and I bet we will see that someday. That's the great thing about having a strategy is you have hope for tomorrow.
Yeah.
And the reason you do is because you've got an idea, and that idea is we want to see rising prices. We want to see things getting popular again. We want the popular kid in classes who we're going to vote for class president. And so, yeah, we can be patient and we can wait. It's interesting, Keith, that you bought that stock in the 70s, because as I was doing my research, I was trying to find a time when there was heavy inflation. And so I went back to the 70s and totally geeked out, and I looked at several utility stocks. That's how dull my life is. I was looking at the 1970s and utility stocks, and you know, we might just have to be patient here, because as interest rates go up, yes, the payment on a utility stock or a dividend stock could go up, but a lot of times the price will go down. And so it's an inverse relationship that we want to pay real close attention to as we're looking for the total return of your portfolios.
I don't know that your life is boring. I'd say when you start doing laps on a roundabout, that might say something about the activity in your life. So, you too can ride with Keith Tyner around the roundabout.
You know, and kind of transitioning, and if you guys want to go somewhere else, I'll just take a couple minutes. I was thinking about this, like, you know, I mentioned a Jesse Livermore quote a couple weeks ago. There's a time to buy, there's a time to sell, and then there's a time to go fishing. And so that time when you're in cash is a great time to go fishing. And Amanda handed me some homework for my own personal self to kind of take a look at my life, basically. And I want to encourage everybody here that's on this call, or if you're going to catch us on the replay, one of the groups that I participate in is doing this exercise of come as you will be in 2023. And that could sound kind of hokey or whatever, but I want to encourage you, especially with the fall. We've been able to get outside spring and summer. We'll be able to get outside this fall, but who knows what COVID is going to look like in the winter. It could be really boring. And so I want to encourage you to start thinking about, hey, what do I want life to look like for me and my family in the next couple of years? What do I want it to look like in the next 3 to 6 months? And that could be personal. Maybe you want to stay in good health. Maybe that's a spiritual thing. You know, where there's no vision, people perish. And so I think you want to have a vision for what things might look like for you. Doesn't mean you have to have like a 27-page game plan, but if you could put some things out there that you would like to see, it might just help you accomplish them. And that's something that I know I'm working on right now, and it's a good time to do it when the markets aren't really doing anything else.
Well, you stole some of my enthusiasm. I was on my way to Gimbal World headquarters this morning, and I was just blown away by the unbelievable colors in the trees this year. Like the fall last year seemed to be kind of brownish, but there's already bright reds, orange, yellows out there. And this weekend's going to be a great weekend for a car ride to get out and just enjoy those. I don't know if the leaves are changing in your neighborhood, but they're unbelievable around Fishers. And even I can see them changing out here in the backyard of Gimbal.
Yeah, if you want to get in your car, I was up in Angola yesterday visiting a friend, and driving back to Indianapolis, I noticed tons of really cool hot rods. And if you want to do something where you really don't even have to get out of your car, if you're social distancing, you could drive up to Fairmount, Indiana, and it's this weekend. They are honoring James Dean, the what was the King of Cool or something like that. And
I thought he was the rebel without a cause or something like that.
Rebel without a cause, and it's really neat. There's all these just great hot rods that people have made their investments, and they're driving them around, and it's kind of a cool scene if you're looking for that one tank trip with your time this weekend. That could be a lot of fun.
What about hang on a second here. Sorry, I had something ringing in my ear there. I thought I'd give a couple different thoughts and updates on things that are going on out there. And I know I'm kind of a numerical guy, a data guy, and so I don't find myself getting overly emotional about things that the data doesn't necessarily support. But I just saw last night that this is just data what it is, that the 2017-18 flu season was the worst in recent history, one of the worst in recent history, and over 600 kids between 0 and 17 died during that flu season. And right now we're at about 94 deaths for that age range with COVID. And so I know that the COVID is really dangerous for those that are my age or older. You young bucks like Debbie and Amanda and Doug, you don't have the risk that I have, but I think that the data shows that young people aren't as much risk out there for this, and so that's some encouragement. I think I hate it when anybody passes before their time, but the traditional pandemics have been more bookends where the death rates were really high for the elderly and the young, and this has been very not as dangerous for the young people as other pandemics in history. A consideration for financial planning for people. I just finished the October anchor, and I was writing about tractor pulls this morning. Doug, what do you know about tractor pulls?
You know, I've taken the boys to some tractor pulls, and there is not much better time in life than a tractor pull. Maybe a rodeo. Rodeo might be the coolest of cool, but a tractor pull is right up there. Yeah,
and I had to research it because when I went, I was down in Evansville and didn't give it much thought other than hooping and hollering and watching. I mean, it's pure entertainment, and I don't want to offend anybody, but like championship wrestling, a tractor pull, there's some things like that that are just fun. And so,
yeah, I'm sure Deb and Amanda love a tractor pull.
My favorite.
Yep.
Well, a shout out to our friends in Anderson. October the 10th, I believe, is the big race in Anderson that fits in that same category. They have school bus races and trailer races, and if you're available, that's a big
right
deal
down
right
the road
there.
from Debbie's house.
Yeah,
That's
Debbie,
right.
if you're not there, I don't even know a point of living if you don't go to that. That's like,
I better go. I've never been there before.
oh my goodness.
You're not participating, Deb? What do you say?
Oh, yeah.
Oh my goodness.
I need to look into that.
Sorry, my ADD kicked in there. Anyway, the tractor pulls. What I was trying to explain to people with the article about tractor pulls, the way a tractor pull works for those who haven't been there is this tractor starts off this 330-yard track. It's like a race to get as far as you can, and it starts with this trailer behind it that has weights that work their way up, and it gets increasingly more difficult for the tractor to go further down the track. And so the more progress they make, the more difficult it becomes. Does that make sense? And there are things like that in life. Like life itself, sometimes the older you get is like a tractor pull. There's more challenges with time. And so
life is like a tractor pull.
Life is, yeah.
You see, this is why you tune in, folks.
Yeah.
Where else can you get this kind of wisdom in life?
I think, we may have to add free tickets to the 2021 Hamilton County Tractor Pull to listeners for next year. That may be, if you're interested in that, send us an email. Maybe that'll be a throw-in for watching this week. But marginal tax rates are a hard thing to understand. Like, I didn't understand them until I got in this business. So what I went back and did was I went back and looked at my first full-time job right out of college. And then I went back and pulled up the marginal tax rates for that time in my life. And what it turns out, what a marginal tax rate says, the more progress you make with your income, the higher percentage you're going to pay in taxes, just like the tractor pull. And I started out right below the tax rate of 34%. That 34% federal income taxes started at $28,800 income, and I was right below that when I started. And I didn't know that, so I was like buttoned up right against it. So I'm in arguing with my manager for a pay raise. And when I added FICA into the marginal tax rate of the $1,000 pay raise I might have got, probably close to 400 of it was going to go in taxes. I had no idea I was negotiating for the federal government with my boss. Like, they should have been sitting there arguing for me. So what happens is when those marginal tax rates get near really high levels, it bogs down the tractor and it can't go any farther. And that's essentially human behavior. And we've got a chart hanging on the wall here that shows the top historical marginal tax rates. But the top marginal tax rate when I started my career in the mid 80s was 50%, which maybe that doesn't sound bad to you, but you hit that marginal tax rate at $80,000 of income.
Wow, 80,000. What year was that?
84,
83?
right in there. 83, 84. Yeah, so you're talking going to the office and doing your job just like you did a few weeks earlier, but half of what you're doing is coming out of your pocket and going into Uncle Sam's pocket. We are at traditionally low marginal tax rates today. And if you go back and pick the year of birth that you were born and plug that in to Google and ask them what those marginal things, and you just look at it, you'll get a feel for how those things have evolved in time. And so those of you that have a lot of money in retirement plans, you might want to take that look at things and see what historical marginal tax rates have been and how they might have affected you, and use that as a part of a decision grid as you're looking and planning in the future. We're happy to talk through those things for you, but I would suggest to you that my opinion is that they're going to start putting a heavier weight on that trailer on the tractor pulls going forward.
Well, and that kind of lends into another thing I was doing this week. I was doing some continuing ed. I don't know if you can see that. And you know, continuing ed, it can be kind of a boring thing, but I actually really enjoyed this continuing ed, the overview of small business. And it just is amazing how many small businesses there are that are out there. And the IRS defines a small business as one with $10 million or less in assets. And you know, half of us are employed by small businesses, and a few of those have retirement plans. And something I want to encourage everybody to start to consider and give us a call, let's talk about it, is just how do you handle your company retirement plan? There may be a Roth IRA option, or I'm sorry, a Roth 401k option that you could take advantage of inside your plan. Or if some of you are retired and you have a large amount of money inside a traditional IRA, there could be some benefits to you by having some more money in a Roth IRA. And so that kind of goes along with what you're saying, Keith, is just there's a lot of folks out there who need to diversify not only their investments, but also need to diversify their tax strategies. And we can give you some opinions on that. And if you need to get into the finer details, we can even refer you to the right people.
That's true. That is a good word.
I've got one more contribution. I know a lot more people are on this call this week because I don't think a lot of people knew that we somehow did Welcome Week and did our weekly call last week. So just a shout out to everyone who did come by again. Thank you so much. It was such a blast. We loved showing you the progress, and stop by soon because there's even been more progress made in the last week. I think we're getting a new roof today, Keith, if I'm not mistaken.
Yeah, the welcome week, depending on what day of the week you came, our office transformed. Like whatever you saw on Monday was not what was here by Friday. And this Friday, it looks a lot different as well. We've had a lot of great workers out, just craftsmen working on our building. I'm so thankful for trade workers and people that are just out making life better for those of us who need some help. So it's a great opportunity to stop by. I almost got a little delayed by somebody stopping by right before the show started. So the welcome mat is always out, and you may want to park on the street today because the roofers tend to leave some nails out on the driveway. So we don't warrant anybody's tires. So you're on your own if you pull in the driveway today. Well, have a spectacular weekend. Feel free to join us tomorrow morning at 9 for Curious Investors. Who knows what we might talk about. We've covered the first 3 stocks that I bought. I even threw in Coleco, which is that's a fun stock to go back in history and see what happened with it. But you're welcome to join us.
How do they join you, Keith?
Shoot me an email. I'll add you to the list.
You asked me a bad question. Aren't there people that do this, Doug? I'm sorry, Amanda. Yeah.
I'm the people.
So, Amanda, what did you say? How do people join?
Just go ahead and shoot me an email and I'll send you an invite.
And Amanda's email is right there on the screen. So you can take a quick screenshot or take your camera out. She's a She's over there on my screen, so I don't know where she is on here.
I'm over here. I'm over there.
All right,
Thanks,
Debbie, any
everyone.
plans for the weekend we need to know about?
Well, I'm getting my parents who are 89 years old to see my latest grandchild that they have not even met yet. She was born last January. So doing some social distancing, but getting them together. So that's pretty exciting.
Very, very cool. That's awesome. Multi-generations are a big deal.
Yeah.
That's
Yeah.
very cool.
Doug, any
Awesome.
parting words as we go our separate ways?
Have a blast this weekend, everybody. Thanks for being on the call. And if you're going to join the call later, thanks for joining it later too.
All right, good to see y'all. Bye.
Hey, everybody. Have a good weekend.